This is going to be a disastrous earnings season, Q2. This will be the trough in terms of year-on-year earnings, and it will most likely be the trough in terms of year-on-year GDP. So the trough for the economy, the trough for global profits. To reference your point you made there about S&P earnings, we think Europe, or rather I should say, sorry, consensus thinks Europe will be down 60% year-on-year for Q2. Now that would be worse at any point than the global financial crisis. The worst, if you think back to remember 2009, Q2 2009, that was the low. That was down a mere 40% year on year. So the expectations, the consensus is as bad as it gets, right? But I think what people will be looking at is not so much how bad Q2 was, but what companies are doing to offset that. Obviously, any guidance. And I think in particular, anything about regions that are improving, because as you just were making the point there, it's been a very uneven recovery in terms of individual indices and stock markets. And likewise, if you think about how we're exiting lockdown, it's been very uneven geographically. So Asia obviously came out first, China came out first. Exposure to China is likely to be good. Europe kind of came out later. UK and US, and some states in the US obviously going backwards now, are going the other way. So I think people will be looking at nuances around geographical differences as we exit the lockdown.
Yeah, I can't help thinking, I think you do as well, given your notes as well, and looking at figure 6 on your reporting. Great chart, actually, pie chart, talking about removed guidance, cut guidance, equaling, what is that, between them, 67% of ratings as well, 67% of companies out there as well. Is it all about the guidance rather than worrying about what sales they lost in April, May and June?
Yeah, I think it is, because as I said, the numbers are so bad. I think people are looking through that quarter. There may be some interesting areas to look at in terms of all these government support schemes in Europe, which are obviously more generous here in Europe and the UK than they are in the US. So the furlough we have in the UK, the chômage partiel in France, the Kurzarbeit we have in Germany, these have been very, I guess, generous supportive schemes. Have they meant that has protected companies' costs, companies' wage costs, and may that have softened the blow a little bit for companies in Q2? So I think that will be of interest. But as you say, the main point is, as we look forward into the second half of the year, can companies give us guidance? What we were surprised by, referring back to that pie chart, is in Q1, you had a third of companies keep, or even in some very small cases, raise guidance. And it'll be interesting to see if they just throw in the towel in the second quarter and guidance starts to disappear further.